Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 15th through Friday, March 19th, 2010. Well, folks, as we get into next week's action, I want to take a look back briefly at what last week showed us so we can surmise what next week could bring on a technical basis. What are the odds of a move up? What are the odds of a move down? It all comes down to the charts. First off, you have to recognize last week. What was last week? Last week was a slow float up week. I mean, really what it was, folks, was lightest volume in years, essentially. Now, we think about March as being one of the more active weeks in the market in volume. It is really not here. What we're seeing over the last week or so, and think about this stat, in the last 6 years, folks, the last week's volume ranked in the lowest 10 volume weeks in the last 6 years. Think about that. Tells you that no one is trading, institutions aren't buying, nor are they really selling at this point. Although what you will see is that the volume candles on Friday, any down volume candle had more volume in it than the up candles. And you have to wonder what that means. And you can see it right here at the bottom of my chart. You're looking at the intraday 10-minute SPY, which mirrors the S&P 500. All right. So again, look at the volume candles. 1, 2, 3, and 4. The 4 biggest volume candles all day Friday were negative or red candles. What does that tell us? Well, it tells us that anytime there is selling, there's larger volume behind that, which tells me institutions continue to slowly, just very slowly, because you're not seeing it in total volume, but they are slowly taking profits here, while the small individual or amateur trader is buying the market up and propping it up and keeping it going. So again, keep that in mind, guys. Next week is Options X. So again, as we come into this coming week, Options Expiration, that's going to make for a very, very wild week. I think this next week could be a eye-opener in many, many ways, not only because of the Options X action, but also because of the ton of economic data that we have. Last week, we almost had no economic data. You had a few reports, most of them on Thursday and Friday. Next week, we have it all. I'm going to cover that as we get into the charts, but right now, folks, that's where we sit. Looking for next week, the volume should pick up dramatically. I do expect a very solid week in volume, and I do expect some volatility behind that. In fact, what I would think is that based on that fact of volume coming in, and notice how all the volume, when the volume comes in the market, it's sold off. On Thursday, it was the same way. On Friday, here's Friday, down move, down move. All the down moves had more volume, as you can see from the red candles. So therefore, it projects out that if we do get a surge in volume next week, you would have to think that the markets, at least overall over the course of next week, should come in a little bit in that regard. All right, now we're going to go to a couple other charts, but I want to cover the technicals on this, what you're looking forward into Monday on your 10-minute chart. First off, you have to look at the markets again, based on any news over the weekend, whether there's more Greece news or Europe news or Asia or even Middle East based on oil, if there's any sort of news, how is that going to impact the market? Ultimately, it comes down to how is it going to impact the dollar. If the dollar drops, oil and commodities generally get a bid, and that will continue to have a positive impact on the market. A lower dollar or a weaker dollar should have an impact on the market to the positive side. So you have to watch the dollar very, very closely. Friday, the dollar was down, which was interesting because the markets really did not end higher on the week, showing us a little bit of a crack in that overall opposite ratio with the dollar and the markets. Now, again, first level on the upside. One thing to watch, see this slanted trend line which connects through the lows all the way on Thursday? That level was broken through on Friday. You broke down, you have a little bit of an in-spirit of pattern here, fell down beautifully. We went right to target, which was the low of the day here at 115.14. Now, the unique thing about this 115.14 level, folks, that was the low on Friday, and this was the exact to the penny low on Friday, happens to be the same level that was the high in January. So the 52-week high in January that was made, which we broke through this week, happens to be the low on Friday. And again, that's just the symmetry of the market showing themselves, also support and resistance. I gave my chat room traders the go-ahead to buy that possibility on the downside at 115.14, and it sure turned into a very nice gain of a good 30 to 50 cent move in the markets all the way back up here to 115.60 or so. So in any case, know your levels. Knowing your levels will be the path to prosperity in this market. And again, we lead you in the research center to understand that, as well as the intraday stock chat. The interesting thing about Friday's action, folks, was the gap up. You had good retail sales. The markets gapped up on a weaker dollar, and then they just collapsed. And that is very, very unique because the last time this happened, believe it or not, was back in January when we made the top in January. And I'm wondering if I can go back and actually show you that. Let's go to the 60-minute and let me scan back on that. All right? Because I do think that's very, very important to note here. Here it is. All right, right here, guys. See this? January 11th, 2010. There's their gap up, and then look at this market. Does this look familiar? Does that look familiar or what? All right, let's go back to the 10-minute. Gap, sideways down. All right, so again, you end off the lows just like you did on that day, but you gapped higher. So again, this is the day I called the top here. Let me flip back to the 60-minute. I called the top right here on the market on January 11th, nailing it beautifully. And again, I was tempted to say that in the same fashion on this Friday. The only thing that happened on Friday was the volume was so light, it makes it very tough, especially going into that options X week. But one thing you did see here is the top was put in here, and we fell down, and then we retested it once, fell down again, retested it twice, creating a beautiful MA pattern. All right, so again, here you go, guys. Look at this MA pattern on this chart. I mean, it's a beautiful MA pattern. There's your MA, M, A, and break down. So again, just because we might have a top in place here doesn't mean we're not going to go up and test those highs again multiple times, even breaking the highs possibly by a little bit on the upside to really flush out the weak hands. But one thing you have to say, folks, January 11th, looks very, very similar to the action. Now, remember this angle here. I'm going to show you the 60-minute just on Friday here. We're going to scan all the way back. Look at that. Gap up, come down, you ended off the lows. So very, very similar pattern here showing itself from comparisons about looking before we had that 9% correction off the January high, and then again what we're seeing here in March 12th. Interestingly enough, this occurred one day after the January 11th. So literally, you were talking March 12th was Friday, January 11th, 2 months plus 1 day prior. Kind of interesting to note that timing as well. Almost identical 2 months previous was the top being put in. Also on the daily, you could also make a case that you have a double top, possible M top if we were to roll over. But again, it's a little too early to know that. Going back to the 10-minute chart, you have this little bit of a break here. We have to see if you recapture this, if this blue line recaptures on Monday and this white line and blue line gets recaptured, meaning if you open up here or go above this and close above it, you're going to look for the move to the highs here at 116. 116 will be your big stand. It'll be kind of like Custer's last stand there before the markets could advance to 116.35. 116.35 is your next level after the 116 that you need to be aware of on the upside. But right now, you have a little bit of a top, and I love the fact how the market collapsed from the start, right from that level. Then the volume got way, way light here, and you basically did no volume on Friday, aside from the beginning and maybe the last little candle right here. But that was that sideways trading. Just not enough volume to take the markets down. But you definitely had institutions dumping there as you had good volume in the first really half hour of the trading day before it became that normal Friday, or at least it seems like a summer Friday, summer doldrums, even though it's March, and that should not be the case. Now, on the downside, folks, you have this pivot low right here. Why is this important? Because it's a double bottom from here. Also, you have the 115.14 level, which is the 52-week high going back to January. So you're still dealing with those January highs. At the same time, if you break through that level, this is where you're going. 200 moving average, you have a pivot line there, another sloped line right here. Right in this area is going to be your next major support. That again stretches from 114.90 down to 114.77.78. So that will be a very, very big level, especially because it has the 200 moving average intraday at that point. If you get below that, you're talking about 114.50 and then all the way down to about 114.10 or so on the charts of the intraday kind of market or S&P as we look at the SPY. So those are your levels, both angles. Going back to the 60-minute quickly, these are your major 60-minute levels. You have your double top at 116. Again, a break of that yields 116.35, most likely. On the downside, if you can take out this 20-moving average right here, this is where you're going. 50-moving average, pivot high from here, pivot low from right in here. That's a key level, and that's at 114.40, 45, right in that area, that 50-moving average, wherever that is on Monday, should it get hit on the downside. If you take that out, folks, then you're going to gap pivot high and also gap window. That's at 113-ish, 113.10, and then gap fill and this lower pivot down around 112.35, 112.40-ish area on the downside. Even 112.50 would be decent support in that range. All right, now again, remember, last week was the lightest volume or ranked in the top 10 volume lightest weeks in the last really 6 years. And what's so insane about that, folks, is that usually the light volume weeks are, July, August, September, those kind of, those periods, the late summer doldrums when everyone's taking vacations. To see a week in March rank up there, it does tell you that there's a storm brewing here. Now, whether or not it's going to be a break up and a real flush out where they slam this market up, I mean, a lot of the people on TV, that's what they're saying. Now, I'm usually a contrarian indicator in that respect, but nonetheless, it could easily happen. You could have one more flush up, take out the 116 level, go a little higher, or are they going to flush this market down on options X? One thing's sure, it's going to be a volatile week with a lot of action next week in the intraday stock chat, I expect, because volume should increase with these economic reports. Plus, you have the Federal Reserve next week. I mean, there's just a ton of things. All that's going to increase the volatility next week and the volume. It's going to be a great day trading week, as well as swing trades should be in action big time. All right, here's your daily chart, guys. You can see again the sloping up, the pivot pull down, and the 9% pullback. Now a repurchase or regain of about 10% there, and that again is where we stand going into next week. You have a little bit of a double top in play, possible reddish, ugly candle there, but we're not sure until we see confirmation on Monday what the Monday action shows. All right, now let's just go over a couple other odds and ends, guys. Economic news this week on Monday. Empire Manufacturing, net long-term inflows, outflows, stuff like that, capital capacity utilization, industrial production. So you have a little bit. Empire Manufacturing in survey is really the number one thing you want to follow there. On Tuesday, though, building permits, housing starts, import-export prices, and even the FOMC rate decision. Wednesday, core PPI, crude inventories. Thursday, core CPI and CPI, and initial claims. So you have some big reports this weekend on inflation. We're going to get some big ideas about how things are going. And obviously, if you take a look here, folks, you also have leading indicators in Philly Fed. So Monday through Thursday, especially Tuesday, Wednesday, Thursday, big stuff going on here. Watch this market, guys. It is going to be a big one. Join the Research Center, hot charts and alerts. We're posting a bunch this weekend on future trades coming into next week. We also entered some trades last week. Pro Trader watch list, these videos, 40 minutes in length to premium subscribers. Also the chat room. We'll see you there, guys. Take care.